Alright guys, welcome back. As you can see, the title of this video is on trend lines and the right way to draw them. And I know a lot of you are probably wondering what I mean by that. So I'm going to go ahead and show you. Here on the right, this SPX weekly chart, I have trend lines drawn, how I'm going to explain to you in this video. And it's a very scientific way to draw them. They have to be perfect, and most people do not know the right way to actually draw these trend lines. So, most of you might start over here on this left chart and just kind of start drawing from, wick to wick. You might have a trend line there. You might have one, there, something like that. You might even draw a channel here. However you want to draw your trend lines, right? There's many different ways. Everyone kind of finds their own way for the most part. But I'm going to show you why it's actually very important to draw them a very specific way, this way that I actually have done on the right here. So I'm going to go ahead and show you how I do that and why it's important. So I'll switch over here. Excuse me. There we go. So the first step to drawing these trend lines is to help change your chart to a line chart. All right, you can do that here on TOS, the style, chart type, and line. And so what this does is it actually each pivot on the line chart is actually the close of the candles on the candle chart. It's not the tops of the wicks, it's actually the closes. The highest close is what that pivot is. And this is important because institutional traders, when they're looking at breaks of levels, which is price levels, trend lines, resistance, support, they're actually looking at closes of candles. They're not looking at wicks. Wicks are not important because price is never going to be absolutely correct in where it goes. There's overshoots, there's undershoots. The important levels are actually closes, guys. So when we make our line chart, when we bring up the line chart, this actually shows closes of candles, and it allows us to draw trend lines connecting the closes of candles, which is what actually matters on a break. So when a daily or weekly candle closes above that trend line, that is much more significant than closing above a trend line that's drawn from wick to wick. And so the reason I have different looking trend lines here is because these long dashed ones are monthly, the smaller dashes are weekly, and the solid are daily, right? So each of those charts is going to have different candle closes. So you have to draw different trend lines. So if we start with the monthly here, you can see these long dashed lines. I've started from this lowest pivot back all the way in 2009, and I've connected it to this pivot here, and goes all the way up, right? And you can see over here on the candle chart, there's actually wicks that have come down to that. And that's why I like having both up at once. Sometimes there's wicks that you can't see on the line chart, and you want to make sure that you are seeing if there's wicks. Sometimes there might be wicks in the middle of the line, and then you're actually connecting a close of a candle higher up on the line. And you want to, make sure you're seeing that you're connecting any wicks that are in the middle as well. It's not always going to be perfect. This one happens to be quite nice. These two wicks come down on the monthly and touch the trend line, pretty much perfectly there. And so you can see why these work so well. You can see this other monthly trend line here is drawn from this pivot here, and it goes up to this pivot here. And as you can see, back in December, we tested this trend line twice. right? Or, I mean, essentially once. We came through it. We could not break, which was a positive sign for the market. We closed the month well above. And as we went down to test that trend line one more time, we took off in the month of January. And so that was a very bullish sign that we had held that long-term trend line. And there's other, there's other things that you can use to find that bottom as well. But, having these trend lines gives you one more reason to realize that we aren't going down anymore, or we aren't right at this moment, at least. These trend lines are very powerful, guys. So if you switch over to a weekly now, or sorry, excuse me, the last month it was the top one. You can see I've connected to just these two pivots here, and it actually lines up with the wicks here. And so it's this close of the candle right here, and this close are actually the things that are being connected on the line chart. And you can see that, these last 2 months we've rejected, right? And this month, which has 4 days left. Yeah, 5 days left, four trading days left. We're actually above the monthly trend line, right? That's huge. So we will definitely want to keep an eye if we can close above that trend line at the end of the month here. Now, we'll go down to a weekly, and we can actually see that the weekly, which is drawn from here to here, right? We can see that it actually touches the wick in the middle, so it's very nice trend line. We haven't broken that. And so that's one thing you want to keep in mind with these trend lines is the longer time frames are usually more important, but you also want to make sure you have a convergence of all time frames, right? If you're breaking on a monthly, but you still haven't broken that weekly, that's probably a sign you don't want to be going and buying the SPX hoping for 4,000 in the next couple of months. You'd want to wait for a break of all time frame trend lines to be absolutely sure that a move is going to happen. One time frame is not always enough to just be going in with all your risk on a certain move, right? So anyways, you can see the weekly is a little bit different than the monthly. It has different closes. So we have the upper trend line channel drawn, and then I have this drawn here from this bottom pivot that was pretty recent here in December, and then all the way up to this pivot here. Now I used to have this actually drawn on this pivot here, and so as you can see, we did start breaking that, but the key was that we weren't breaking daily trend lines during that period. And I'll show you what I'm talking about, but we weren't breaking other trend lines, so it wasn't a convergence of everything, right? And along with other analysis like price levels, I knew some price zones down there, and we were actually finding support at a very important price zone, which happens to be from this area, this 2800, right? And we weren't getting below that. And so that was another sign that, we really need to get below that before I'm sure that we're going to come down and test lower. And sure enough, we have gone back to the upside. So I'll move that back. So yeah, this is the current trend line. As you can see, we've been holding it very nicely with these long tail candles on the weekly here. And we've actually broken to the upside on this weekly trend line. The weekly and daily are both pretty much right there. We broke both of them this week. This is a weekly close. It's a static candle. And this is bullish, guys. We have 4 days left in the month to come back down. It's very possible. We obviously are very jumbled here, right? Jumbled with a lot of trend lines, a lot of levels. It's going to be choppy. Anything can happen at this point. That's why, especially if it's okay, we have a weekly and daily break. Yes, it's bullish, but we're in an uncertain period here. It is bullish. We can play it day by day, but we do have to be careful. at this period in time because we still have this weekly trend line. We want that convergence, right? And so lastly, I'd go down to a daily and say, okay, well, are there any lines that don't really match up, with my other time frames? And you can see there's clearly one here that's slightly off from the weekly, right? And that lines up a little bit differently. So even if we are breaking this weekly, I want to make sure we're breaking this daily as well, and then we have a lot of room to the downside. That would be very bad for the market. All right. And you can see the daily on the top is just slightly different. And I just want to show you guys, when you draw these perfect right on the lines, look at this recent price action around this daily trend line, the solid one. All right, we come up, we reject, we have a doji, we open above, come down, we close right on the trend line. The next day we open right on it, we close below. The next day we gap above it again, we go. The next day we reject, we close on it again, right? And then finally we're able to sustain, right? And this, ever since this day here, right, we had held above the trend line and it was acting as support. And then the monthly trend line, we had a nice hammer candle off that trend line, and that, along with some other clues, led me to believe that we would get this Friday rally, and we did. And I mean, that's how you use these trend lines, guys. You draw them perfectly, and they're not always going to be clear. Obviously, look at all this chop, right? It's not always going to be amazing, but using them all together and then mixed with other strategies, fibs, supports, resistances, those important levels that I've talked about. Using all those things together can really allow you to see the market much clearer, right? And so, along with these different time frames, I'm just going to switch back to weekly. You also want to make sure when you're looking at the market as a whole that when a certain sector is breaking down or breaking up, you want to look at different indices, like the ones I look at in my analysis videos, and you want to make sure that they're actually confirming what you are seeing, right? So if we go over to, say, the IWM small caps, and we are looking at its trend lines, well, this is interesting. These are all weekly. I've got them done weekly just because we're at the end of the week here. This is interesting because the IWM actually hasn't broken out of its trend line. So it's showing weakness. It's not confirming the weekly breakout that the SPX is, right? And if we keep going around, let's look at the Qs. The Qs haven't broken either, right? They're still inside of this rising wedge. They have closed above the all-time high close, which is a positive, which means it does have room just like the SPX does, but it's not confirming the same long-term rally view that the SPX might be trying to tell us, right? So let's look at the transports. The transports have broken out, and they do have a little bit of room, but they also have this very important level, right? So I would say it's a positive sign, but this thing can come back down, right? It really needs to break above this level, and that would be a huge thing for the transports. That would be very positive, right? So we're seeing mixed signals. Financials have broken out of a smaller trend line. It's not as important though, because it's had two touches, right? We like trend lines that have many touches. That validates their importance. We want 3, 4, 5 touches. When those kinds of trend lines break, that's when big moves happen. That's when it's very important to the market. That's when a lot of people are watching the trend line. A lot of people might not be watching this trend line because it only has 2 touches, right? Maybe 3 if you want to count this. So while it might be important to some, it's not important to the whole market. It's not a huge trend line. And we clearly have a bigger level right above closing above this, okay, yeah, then we're looking very bullish. If we can get follow through, yes, but as of right now, this still isn't showing complete bullishness. Let's go on another 2-3 year bull run type breakout, okay? And lastly, I just want to show you this Tesla chart, right? And I've gone over this in my analysis video. I just want to show you just with trend lines on here though. These are weekly trend lines, they're all weekly. You can see on the line chart here, I've drawn straight from point to point, right? I don't just lazily draw them. I draw them very nicely, right? Point to point, right? And you can see look at all the wicks from drawing from close to close. Look at all these wicks that were rejected that you would have been able to play, right? Rejected. And here we finally break out, right? Now, you might not want to always play right on the break. You might want to be looking for intraday. If you're a swing trader, in this situation, it obviously would have been better to wait for a retrace. I mean, Tesla was in a very long downtrend here for many, many months. And so if you're a swing trader or you're just looking to pick up shares, it's best to wait for a retest of this trend line, or maybe pick up half a position, wait for a retest and get in at a better price. And if you actually throw on some fibs here, you can see that it was a perfect 61.8% retrace. And look where Tesla is now, right? Another thing I want to explain is what kind of price action do you want to see before a trend line break, right? So the difference between the first one and the second one is the second one's essentially in a bullish flag pattern, right? It's not the most perfect flag, but it has a nice rally. It pulls back and it's holding and it's riding this trend line for many, many weeks, a month here, right? And we're not breaking out of the lower trend line. We're holding it very nicely. Look at these wicks, right? This is the type of price action you want to see when you're looking to go long or short on a breakout of a trend line. You want to see this many week long riding the trend line, and then it breaks. That will usually lead to a big move, and obviously earnings help this move, and short squeeze and whatever you want to blame on it. But this is the type of price action that you want to see when you're looking for a trendline breakout. This type of price action, not so much, right? You're going up to the trend line, you reject it 1 week and you go through. That's not really something you want to jump on right away. And so as you can see, it was nice to wait for the pullback. This is what we're looking for, guys. And this applies to any time frame, right? Like it can apply to monthly, weekly, daily. I really wouldn't go too much lower than like a 30-minute chart as far as like important breakouts. I think if you go lower than that, it still works, absolutely. This concept is the same. Use a line chart or draw from close to close if you can see that well, and you don't need the line chart. But there can be definitely more fake outs on lower time frames. 30-minute, hourly, that's typically the lowest you really want to go for like important levels being broken, whether it's support, resistance, trend line. 30-minute or hourly tends to still have a lot of importance, especially to day traders, right? So yeah, guys, I hope this video helped you guys a lot understand the science behind trend lines, how you should be drawing them. Obviously, nothing in the market is magical and works 100% of the time. This is no different. Sometimes you have to readjust trend lines when there's a slight break and then it doesn't really work. That's why it's important to look at the price action before a break. Does that confirm a break, right? And use supports and resistances, use everything together along with these. And you guys can make some great trades with these trend line breaks, okay? So thank you guys for watching. If this helped you, please share it with anybody that you know, share it with anybody that hasn't heard about this technique, and drop a like, drop a sub, and I'll see you guys in the next one. Thanks for watching.